Hi everyone, today let's talk about Berkshire Hathaway, then we'll get into some other interesting news, as well as the data for the week. Then we'll get into the charts, as well as my results for the week and my thoughts going into next week. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open, as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So Berkshire posted their earnings over the weekend as they usually do, and it was a massive jump in operating earnings. Cash pile sitting at $157 billion, massive amount of cash. And they did get a lot of earnings from the surge in bond yields, short-term treasury bills yielding at least 5%. And since they are sitting on such a large amount of cash, they are raking in a lot of interest off of that money. They mention here operating income came in at $10.76 billion, a 40% increase from the $7.65 billion earned in the same quarter a year ago, which is a massive jump for a company like this, very mature, very large, and still making big jumps in operating income. They say the conglomerate owned $126.4 billion of treasury bills at the end of third quarter compared with $93 billion just at the end of last year. So they are buying treasury bills, raking in that interest on their cash pile while they sit and wait for better opportunities. And they've been pretty outspoken in terms of saying that the stock market as a whole is a little bit overvalued, and they are still picking stocks here and there. But a large cash pile like this says that they do not believe that the stock market as a whole is an opportunity. In terms of the stock, you can see it was sitting up around $563,000 per share. This is Berkshire A, so massive, massive stock. And you can see now it is sitting at $533,000. So a pretty large swing from the peak going back to September of this year. Dipped all the way until just about the end of October, and then it rallied to the upside, basically with everything else. They say the crown jewel of Berkshire, being Geico, had a very profitable quarter at $1.1 billion. However, they did see a decline of 15% in earnings from their railroad division. I do like looking at Berkshire's earnings because they kind of give you a conglomeration of the economy. They own so many different sectors and so many different companies that it kind of gives you that more holistic picture. They talk about the large stake in Apple and how shares of the iPhone maker fell 11.7%. We've been talking about that on the channel. They just are not selling iPhones the same way that they had been. And just like we talked about in their earnings announcement, they are not expecting any growth during the holiday season from last year. They did mention that there are still some various effects on the company related to the COVID-19 virus, and they're waiting for the economy to kind of work its way through those after effects. Moving over to the Sam Bankman-Fried trial just for a moment. He is facing over 100 years in prison. He was found guilty. He's just waiting for his sentencing at this point. Obviously, he is a dumpster fire of a human. Stole a bunch of money from everyone and then ended up spending it, buying his colleagues lots of homes and cars, and donated a bunch of money to various political parties. Well, really just one of them. But otherwise, he is not a great person. He's going to jail for a long time. He was found guilty, just for your awareness. And lastly, for news here, I wanted to highlight that Iowa's Citizen Bank did get seized by the federal government. They were shut down, and their assets and deposits have been assumed by Iowa Trust and Savings Bank. This is a very, very small bank. It's not going to have a large impact. Assets were valued at $66 million, deposit amount $59 billion, so there's not really a big separation. They were insolvent for sure, but very small bank. Just interesting to see this in the news, and probably something we should keep an eye on in case it starts to propagate once again. Moving over to sentiment, still very weak on the bullish side, very high here on the bearish side. And this is from the first, even after we had seen a little bit of rallies last week. I do expect this to shift pretty dramatically over the next week, but it is interesting to see just how many bears were out there, over 50% saying that we were going to be lower over the next 6 months, which is just about at the 1-year high for bears, and just 24% here on the bull side, over 10% below the historical average, and way below the 1-year high. And as a contrarian metric, does seem like an area where we were expecting a bit of a bounce. We had talked about it being an area where we could bounce. And sure enough, we did get that bounce this week. And of course, the question now is how high can we go? Moving over to the fear and greed model, we are sitting at a 42. previous close was a 32, so we jumped 10 points in just one day. And you can see that here on the momentum, we are back to neutral. You would expect fear and greed to at least get to neutral, so maybe one more day potentially. But look at this chart now. We had a high, lower high, broke that 125 SMA, retested it, broke down from there, established a lower low, and then we rallied right back to it. The question is what happens now? We'll take a look at that closer on the charts, but neutral on that measurement. Strength still in extreme fear. Breadth still extreme fear. Put call ratio is starting to taper off a little bit, but still in fear. Volatility has pulled back really dramatically back into that more neutral range. Safe haven demand has neutralized a little bit as well. And then junk bond demand in just greed here. It's been in extreme greed for a while, but it did sell off pretty dramatically and then bounce over the last couple of days. And that's considered to be greed by this metric. Moving over to the economic calendar, not much here for Monday, Tuesday. 3-year note auction, fairly interesting. Wednesday, 10-year note auction. We have a Fed member speaking. We also have Jerome Powell supposedly speaking at 10:15. It'll be interesting to see if that one is relevant. Can't imagine he's going to say anything more than what he already said at the FOMC statement. You also have him speaking again on Thursday at 1500. Fed balance sheet, continue to watch that roll off. As always, you have initial jobless claims, which did tick up a little bit the last week. Might be interesting to watch that this week. Then you got a bunch of Michigan data. Does not affect the markets a whole lot, but it is always interesting to look at. Moving over to Max Payne, you can see the top of the puts here at 436. That is only about 75 cents higher than current levels. Max Payne 424. Between 420 and 430 does make sense. We might have run out of room to the upside based on this chart. Obviously, this varies throughout the week, but right now it's not saying there's a whole lot of upside left. Put call ratio down at 2. That's one of the lower reads we've seen in a while. Don't put a whole lot of stock into this chart yet. There's not very many options in the markets right now. We'll continue to watch this throughout the week, and it does seem like we've kind of topped out based on Max Payne. Moving over to the charts, starting off with the S&Ps here on the weekly chart, you can see that massive green candle coming right up to weekly VWAP, sitting at 43.54. The question is, can we get to the upper trend line up around 4,400? You can also see this longer term mid trend line also sitting at that same area. It does seem like an interesting range, but we got a pretty significant step down on weekly momentum. That's the first time we've seen a step down, going all the way back to when we stepped down from bullishness from the end of July until current. So big move here. And based on that, you would actually expect more follow through potential if we cut through this kind of grouping of trend lines between 44 and 45. Then we have an upper trend line sitting around 47, which would obviously be a massive move and would probably take a few weeks to get there. But this is a very convincing bullish candle, big engulf, actually engulfed the 2 previous weeks, and it does look very bullish. Moving over to the daily chart, just to give that closer in perspective, you can see we are already at those same levels where we kind of stalled out on momentum here previously. We're right at that highly traded zone at this previous consolidation. If we did see a little bit of a pullback, I think it would happen here. Potentially look for a higher low, maybe down around 42.60. That could be interesting. But this has been very strong, 5 days in a row, straight up. We saw it on the weekly chart, looked very bullish. Doesn't mean we can't go one more day up to this next level here at 44. But nothing goes in a straight line. Just like we went straight down, we have now gone straight back up. And it wouldn't shock me if we saw at least a little bit of a pullback and then a bounce from there. And looking at the SPY here just for a moment, we got up to 435.88, touched that level, and the 55 EMA pulled back from that level a little bit to the downside, 431.71, to the upside, right in that 440 area. Moving over to the NASDAQ on the weekly chart, similar thesis, 2 down weeks, big bullish week, engulfed the previous 2 weeks. We're right at trend here, so the NASDAQ has looked a little bit stronger. We rallied up, kind of did this flag type setup. It was expanding slightly, which is interesting, but zooming in here, you can see we are right at that level. If we stack candles, you could expect a much bigger move, potentially up into this 16,000 area, which would be about another 1,000 points higher from current levels, and then longer term resistance sitting up around 17,300. And just for some context, if we did get to that upper trend line, that would technically be a new high. All-time highs currently sitting around 16,740, which would obviously have some resistance if we got into that zone, in my opinion. Moving over to the daily chart, you can see that same setup. We're getting into the range of that upper trend line, marks the top here in July, and then the tops here again at the beginning of September, and then one more time here in the middle of October, and we are testing that same area. This is still technically a short-term downtrend. We've continued to make lower highs and lower lows. The question is, can we double top, pull back, establish a higher low, rally through, make a higher high, and start to change that trend characteristic? We are above all of the EMAs and SMAs, so that's bullish, but you can see the last time we had that happen, we hit the trend and then we pulled back pretty strongly from there. So you have to watch for that same setup and wait for the characteristic changeover to get more aggressive to the bull side. In terms of levels, you can see we are right on top of one, 367.63, just a couple of cents above it. I consider that to be right on top. Also hit that medium-term trend line. And then to the downside, I have 364.84 and to the upside, 370. Moving over to the Russell, you can see that same bullish candle, massive on the Russell, 7.5% right up to the 9 EMA on the weekly chart, right into this previous consolidation going back to mid-May. Last time we bounced from this area, we had a couple of strong weeks, got all the way back up to that 199 area. You can see we've been chopping in this range for a very long time. We tagged the bottom of that range. We're seeing a big bounce from there, big volume, momentum stepping towards bullish, and everything looks good here. Moving over to the daily chart, you can see we did hit that trend line. We are technically above it, but you can see we got an island reversal above it here, and then we ended up falling for the next couple of weeks. So we're right there now, watching that 175.96 level. Next level for me, 179.17. You'll also have the 55 EMA there at 176.94. Interesting, right in that zone. Again, massive gaps left behind, massive rally, super aggressive. This kind of momentum is not going to last forever. The question is, how much further can we go? You do have the highly traded zone up here at 184. That would be a pretty aggressive move. And how would it happen? Can we continue to gap and rally like we've been seeing? Looking at this range here, you can see we gapped the entire range and then rallied through, which is super aggressive. Again, everything looks very bullish, but we are getting pretty close to overbought conditions on the daily chart. Momentum very strong. Everything looks bullish, but just keep it in the back of your mind how aggressive this has been. Moving over to the Dow on the weekly chart, up 5%, engulfed the previous two candles, very close to that 21 EMA, got above the highly traded zone here on the weekly chart. Similar thesis on momentum and volume, big step up, everything you would want to see if we were going to see more bullishness to the upside. And the kind of impulse that you see on candles like this typically has at least one or two candles of follow through. We did see something like this here in March. Big bullish candle, closed at the top, got another 2 bullish weeks in a row. Zooming out here, you can see candles like this from the September-October low on the Dow. Big bull candle, slight retrace, another big bull candle. So just because we are a little extended in the short term doesn't mean that we can't do it again, and everything still looks good here on the Dow. Moving over to the daily chart, you can see those levels, 339.11 and 343.23. You did get a doji candle after a gap up. Certainly a possibility that we see some rejection from this previous top. I don't have a level there, but you have the 144 EMA acting as dynamic resistance. Again, doesn't mean it can't go through there, but you do have to pay attention to these various levels. And that would be a change of trend as well here on the Dow. That would be a higher high. Then we could pull back, establish a higher low, and then we would have that change of characteristic on the Dow. And that is what I'm watching for. Moving over to the equal weighted S&Ps on the weekly, same thesis, 6% on the candle, step towards bullish momentum, right at the 9 EMA in the highly traded zone, and this previous consolidation from May and April. Again, would not shock me for at least a slight pullback, maybe even all the way down to the 200 SMA down at 136.69. I have a level here at 137.56 from this previous low here in March. But again, massive volume in the 2 previous candles, big follow through, closed right near the highs, closed right at this downtrend line. Everything looks clean to the upside. Similar move like this in that October move. You can get a pretty big run of 15 to 20%, just like we got off of those previous lows. Moving over to the ratios, starting with copper divided by gold. We did get 2 bullish weeks in a row here now, and we got back above 1830. We're right at these previous lows. You want to see this follow through here. This is typically correlated with the S&Ps. As long as copper is going up versus gold, that tends to be more bullish. And you can see we had 3 bearish weeks in a row as the markets were moving lower. Gold was going higher. Now we're seeing copper start to make a little bit of a resurgence. Coming off of this support level, we're technically above it. Next level sitting at 1927. Moving over to the SPX divided by the M2 money supply, you can see we did get that bullish candle. We're almost to that 21-22 level. I do want to show that we did see something like this where we got close to that 55 EMA, and then maybe this is the ultimate high here where we get back to that same level and then pull back from there, or we saw a leg like this on 14 March. Ended up rallying back into the zone and then still having a further sell-off. Question is, which one of these are we going to see? How much of a follow-through are we going to see on momentum? Do think that remains to be seen. We're still making lower highs consistently. Will this one hold right here and then break down further? Certainly possible. We tested the 55 EMA. It held on this first test. And like I said before, I do think we'll see more bullishness off of this big impulse. But the question is how much more bullishness, and that remains to be seen. Moving over to SPY Russell and NASDAQ SPY. SPY Russell, we're seeing Russell outperformance, big down candle, rejection off of that 252 level, momentum rolling over. We could see Russell outperformance, at least in the short term. Obviously, this is still an uptrend, but big bearish candle looks good for the Russell over the next little bit. Similarly here on the NASDAQ SPY, NASDAQ outperforming. SPY seems to be the weakest of the bunch in terms of ratios. I would expect this NASDAQ to push up to 355 if we continue to see bullishness across markets. Moving over to Apple and Tesla. Apple getting into that downtrend line. We've marked it 4 times now here. If it breaks out, that could be interesting. You got the 21 sitting at 181.44. Big volume, momentum stepping towards bullish. Could see a breakout. That would be interesting. Almost looks like a flag setup similar to the QQQ. You can see a big rally into it. Flag down. If we see that rally out, could be quite aggressive. Tesla, very different on the setup. We have a high, lower high, big breakdown, took out this midpoint just by a little bit, overthrew it down to my 197.75 level, and then ended up holding that 200 SMA at the end of the week on the weekly chart. Next level for me, 232.57. And it does look okay coming off of that 55 and the 200, potentially to that next level. Moving over to NVIDIA and Microsoft. NVIDIA had a big bullish week like everything else, got above 447.13, which was my level. Now we're looking basically to these next highs at 488. The ultimate wick high is just around that $500 level. It does seem like we could push back to there after we have now broken these levels. We're back above all the EMAs. It does look bullish once again here on NVIDIA. And like I said before, this has been a very strong stock, and it wouldn't shock me if it went higher. I do want to expand the Microsoft chart here just for a little bit. I want to highlight that this is a new close here on the weekly chart. New high for the weekly close, all-time high, momentum bullish. They had strong earnings through wick to that upside. And now we are making new highs on a closing basis. Next level for me, 361. It does seem like we're going to get into price discovery here going forward. Moving over to staples and discretionary, they both had very bullish weeks. We talked about staples bottoming at this level for a while now, and now we got the big break higher on a closing basis. Still want to see it get above 68.91, as well as the 200 SMA and VWAP currently sitting at 69.75. Next level, 70.85. Does look pretty good. Last time we paused at this level, we ended up getting a really strong move through here, all the way up to 77.50, so certainly possible we get another move like that. Discretionaries, similar move. Big bullish candle, just over 7%. Momentum stepping towards bullish. Volume pretty decent, right at the 9 EMA. Next level, 162. Hold that level, potentially push up to that 170.68 right at these previous high consolidation and that highly traded zone at 171.83. Moving over to breadth, we ended up finishing right around that 52.81 on the 50-day average. Momentum stepping towards bullish. When we get candles like this, typically we see more bullishness to come. It does seem like that's going to be the case. You can see that here in March, big bullish candle. We did get a little bit of a consolidation and another dip low, just like I've been talking about. It did take a few weeks for that to happen, but then ultimately we made a much higher high. Similarly, here on the 200-day average, we had a candle like this in October of 22. Ended up getting like 5 or 6 more candles of bullishness, slight dip low, and then more bullishness. So breadth saying that we're going to go higher even if we get a couple of pullbacks. Those will likely be opportunities to the bull side. Moving over to yields just for a moment, I talked about this in the Friday video, but they are selling off quite aggressively. We now have a new low here on the 2-year versus the low on 10 October. We also wicked low here on 11 October on the 10-year yield, still holding up at that 55 EMA on the daily chart. Want to see this pull back much lower down into this 4 to 4.25 range. That could be interesting. I don't know necessarily if we will get there, at least in the short term. Probably will eventually, but the question is when. And I would like to see this make a new low versus this previous dip low to start seeing a change of trend on the 10-year. Moving over to the dollar, we talked about this previous consolidation. Now we got the move lower. How much lower can it go? We have some support around 104.35. Could stay there. Also have the 21 EMA at 103.93. Certainly possible. And if all of that breaks, then we have some levels all the way down around 101.25 and just above that with trend at 101.50. If we got into that area, that would be quite bullish. And you can see momentum has been stepping down for a while. Now we got the big bear candle, and you would expect that to follow through with at least a couple more weeks of downward movement, in my opinion. Moving over to the VIX on the weekly chart, you can see that big bear candle. We hit the 200-week moving average just barely. I thought we would overthrow it here to the 24.50 trend line. We didn't quite get there, and now we've got a massive bear candle back into this previous consolidation right at my 1490 level. If it holds here, that could be interesting. I doubt it though. Momentum is stepped down pretty dramatically. RSI crossing below the 50 as well as the SMA. This is absolutely a change of trend. Doesn't mean we can't bounce, establish a lower high, and then sell off back to these previous lows, sitting around 13, and then I've been watching this 1177 level for a while. Overall, everything looks weak here on the VIX, which should be bullish for equities. Moving over to my accounts, you can see I'm at 105.416. Pretty good week. Obviously, I didn't capitalize on everything, but I did make some money, so you like to see it. Current positions, 174 going into the Monday session. Looking at the Qs, I still have my core position. I do have $7 credit on that position, so max profit 369.64, which does give me a little bit of upside potential, but not a lot. And that expiration would be Friday of next week. We'll see how that plays out. That is a lot of credit. And like I said, the move has been quite aggressive, so I'm doing a little bit of protection there. And then looking at my puts, I do have some for Monday at 366. And I have about another $1 or $1.50 potential profit on that position. Overall, moderately bullish going into the Monday session. Let me know down in the comment section what you think of the Berkshire Hathaway earnings, Sam Bankman-Fried, or the very small bank that went out of business. Are we going to see that tick up once again across markets? Or is this just a small anomaly? Definitely like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.